Hi, thank you for everyone joining our panel today, strengthening the SME ecosystem. And my name is Songbae Lee. I am the Ag Finance Team Lead for USAID, the Bureau for Resilience and Food Security. And to start off the panel, I'm going to turn it over to Carol Jenkins, who's the Office Director for the Center for Ag-Led Growth. So we're both out of USAID, the DC office. So with that, Carol, let me pass it over to you.
Great, thank you, Songbae. I have the great pleasure of helping kick off this discussion today. And first, I'd like to extend a warm welcome to everyone participating and a special welcome to our panelists today. Small and medium-sized enterprises make up about 60% of agriculture productivity and trade in Africa and provide a pathway out of poverty and hunger. However, they face a $36 billion investment shortfall each year. While this may feel overwhelming, USAID and its development partners are working to address this shortfall through activities such as the African Green Revolution Forum Deal Room, which USAID has supported since its inception in 2018. And over this time, we've learned a few things. Okay, so first we've learned that engaging small and medium-sized enterprises is not just about engaging in a one-time, once-a-year event. It's about providing technical assistance throughout the year. The second thing we've learned is we need to do a better match between the lenders and the borrowers who attend the deal room. We have started to focus on identifying those lenders who respond to the market need and market demand for smaller sized loans that better match the demand that we've seen from the businesses, the agribusinesses and the agri-SMEs that are signing up for the deal room. Third, we are helping agribusinesses access capital, and it goes well beyond connecting them just with investors and lenders. Agri-SMEs need connections to other resources, including technical assistance, training, business advisory, service providers. And then finally, this is not a process, but it's more of a journey. The point of AGRF is not to be a standalone event. It's to be catalytic and to use its visibility and its convening power to strengthen the overall ecosystem for development and growth of agribusiness and agri-SMEs. So today we get to hear from 4 activities that work with agri-SMEs in Africa. 3 of them are funded by USAID, and one of them is funded by the Foreign Commonwealth and Development Office, our British counterpart. Our speakers will highlight innovation and private sector engagement, and we'll learn how the deal room can leverage their work and how these 4 activities can also leverage the work of the deal room. Each one may sound similar at first glance, for example, providing technical assistance to agri-SMEs, but we'll dig a little bit deeper and find out how they really focus on different areas and how, more importantly, what that means on a practical level to the agri-SMEs who are participating in the deal room. We'll learn about how ACELI provides technical assistance that targets SMEs with revenues between $50,000 and $250,000, and they're currently accepting applications. We'll also learn how the Alliance for Inclusive and Nutritious Food Processing provides customized technical assistance and food safety training programs for local processors in 5 African countries. And this is also, they also have a rolling application process, which is currently open on their website. We'll also learn how the Kenya Investment Mechanism works with business advisory service providers through bank partners, and how Casa, the commercial agriculture and smallholder and agribusiness, works with a portfolio of international investors. There are other programs that USAID works with and supports, including mobilizing finance and agriculture in Ghana, Prosper Cashew, which is funded by the US Department of Agriculture, Enterprise Development and Growth Enhanced in Zambia, which I understand is on this call, and the agribusiness investment activity in Nigeria. While we would have loved to include them in this presentation, we just don't have the time to hit all of these impressive activities that we have currently ongoing. We do have a PDF that will be shared with more information on these programs. And with that, I'm going to turn back to Songbae Lee, who will introduce the panelists today. Thank you.
Thank you very much, Carol, for those opening remarks. And I am just going to add a couple more points before I turn it over to our panelists. So first, I'd like to really encourage any investors and lender on this call to start making meetings with SMEs that are on the platform. So I think the last I checked, there were 174 capital providers. So if each one of them only made 3 meetings, then we would have over 500 meetings, which I think would be great. So I really encourage that. It's something that I am trying to walk my talk and also schedule 10 meetings myself with SMEs. I had my first one this morning with a young Nigerian entrepreneur. It was great. The meetings are 15 minutes. That's set by the platform. So you can have a quick call, not take up too much time. And we also encourage you to do the call through the platform, arrange it and actually have the call. And that helps us track how effective the platform is. The second thing is, I think I was on a panel earlier today, and it was by Casa, and it was presenting some SMEs that were presenting. So that was targeted to more of the investor and lender audience. But this webinar, this panel is really targeted to the SMEs themselves. So I really wanted to provide some basic information about the activities that they work on, because I've found myself that it's kind of hard to understand what they do just by reading their website, even if I work at USAID. So what we did is we prepared a very informal summary, which I think has been shared in the chat. There's a link and you can download it. And the ones that are highlighted are the 4 that are speaking today, but we included information for technical assistance activities that are in other countries as well. So another thing I want to do is explain a little bit about how these programs work, because as I explained, it mystified me. So broadly, there's 2 ways that we do programs at USAID. We have contracts and we have grants. So KIM, the Kenya Investment Mechanism, is an example of a contract. This is something that the Kenya mission, the USAID office in Kenya, designed. And then they put it out for a request for proposal, an RFP, which Palladium won, the implementer. So you have, excuse me, it's a USAID design program funded by the USAID Kenya mission, implemented by Palladium, and it's called the Kenya Investment Mechanism. So it's a little confusing because there's lots of different parts, but I like to consider that as kind of a traditional technical assistance program that runs for 5 years. Now, ACELI Africa is an example of how we fund a program with grants. And so ACELI Africa was an existing nonprofit that has this activity that we'll hear more about. And then we gave them a grant to support their activity. So why is that different? ACELI came up with what they wanted to do, and then we agreed to support them. The second thing is our funding lasts for 5 years, but ACELI itself will continue after our funding ends because it's an independent activity. So that's just a little background. I will put in the chat, we did have a webinar last year that compared the similarities and difference between ACELI Africa and the Kenya Investment Mechanism. So if you want to learn more, you can click on that. The third thing I just want to say, and the last thing before I pass it over, is that I want you to learn about these technical assistance activities, but I wouldn't encourage you to apply to all of them at once. So just the same way, when you're looking for an investment or a loan, it's not always the best idea to just bombard everyone with emails. You want to do your research. You want to understand what their investment strategy is and what their criteria is and whether you fit. And it's the same thing with the technical assistance programs we're talking about today. They're different. They all sound the same at the beginning, but they're different, and you want to see which one best matches you. And just like what I like to call we talk about value chains in agriculture, and that's easy to understand, but there's also a concept of value chains for investors, meaning that some investors come in early and some investors come in later, so that you need to know where your business fits in. And I think you can apply the same idea to technical assistance. You have some technical assistance programs that might be providing general capacity building. That's better for companies that need more basic business advice. And then you have other programs that are more operational, and if you have a very specific problem, they can match you with the resources you need. And then all the way on the other end, there's programs that work with businesses that have already found investors, and they're post-investment technical assistance. And so you can start with one, and the same way you can graduate to others. But you can see why it wouldn't make sense to apply to a couple of them at the same time, because clearly one of them would not be appropriate for you. So that's all I had to say. So now I want to turn it over to our panelists. And the first thing I'd like just to ask them to do, let me just switch my screens to where my questions are. Just want them to introduce themselves and their activity. And when they do that, I first want to mention all their bios are on the platform, on the website for AGRF. And second, the document we shared will have their website, so you can get a lot of basic information. So when they introduce their organization, I'd like them to explain what the activity mainly does, where the technical assistance activity fits, because some of them are all technical assistance and others technical assistance is only a part of their activity. And then finally, what their specific role and position is within that overall activity. So why don't I start with you, Beatrice?
Thank you, Songbae, and hello, everyone. My name is Beatrice Githinji. I work at the Alliance for Inclusive and Nutritious Food Processing Program, AINFP. In short, we call it the Alliance. And this is a partnership between USAID Partners in Food Solutions and TechnoServe. The program provides both local experts and experts from multinational food companies to local food processors to help them address very specific manufacturing and business challenges that limit their growth. We are in 5 countries, Ethiopia, Kenya, Malawi, Tanzania, and Zambia. And my role in the program as an access to finance manager is to support the processors within AINFP raise the capital they require to implement their growth plans. And this capital could range from working capital financing, access to asset finance, capital expenditure. And we look at various sources of capital. This could be private equity, impact investment fund, challenge fund, and commercial sources, which is mainly commercial debt. Just to touch a bit on the technical expertise of the program, we have 3 main focus areas in which we provide the technical expertise to SMEs in food processing. And the major one is food technology, and some of the support areas is developing new products. You could have an SME who's been doing one product, you're seeking to develop a new product, where the program is able to support you get the formulation and develop a new product. Also support areas in terms of improving the existing quality of the product, and that very speaks to improving the shelf life of the current product. We also have factory optimization support under food technology. And this includes doing a process capacity assessment for the business to achieve optimization and to save on cost. The program is able to help an enterprise achieve that. We also work with millers, and these are millers who could be looking to purchase new equipment. And we support them in getting the plant and floor layout designs, so they're able to achieve optimal processing flow at the enterprise. The other main area where the food technology is on nutrition and fortification. It could be an enterprise who's seeking to either fortify your products or improve the nutrition element or value of your product. The program is able to support you with the right formulation and also to take that product into the market. The second category of support and the technical expertise is the business development. And this also ranges across the various needs of an enterprise. And this could include developing a very practical business plan, developing a business strategy to support and manage growth of a business. We also have marketing support. And this includes developing a marketing strategy if you don't have one. Also, how do you redesign your product packaging? How do you redesign your brand positioning in the market? And this mainly applies to enterprises that are seeking to increase their market share in whatever market they are serving. We also have a third element, the business development support, which is creating sustainable sourcing of raw materials. And whereas we don't work directly with the smallholder farmers, we are able to support an enterprise create a sustainable sourcing of raw materials by either linking them with other existing programs that are working with the smallholder farmers in those value chains, and also supporting the business just work better, engage better with the small scale farmers. The third component at the business development is training, and this training could be customized to a specific business. So we could conduct this training at the factory as long as the company has more than 5 employees. We also have broader training sessions in each country that actually address very sector-specific challenges. And this could be the issues of aflatoxin, could be the issues of good manufacturing practices, and this is actually open to processors. The last component of the technical assistance support is where I sit, is access to finance component. And this specifically starts by doing a very thorough assessment of a business in terms of understanding where their business gaps, where their financial gaps. Then from there, we do support, once the gaps are very clear, we support the business in investment preparedness. And then we link the business to available capital providers. And as I mentioned, this could range from impact investment funds, could be commercial debt, which is mainly commercial banks. It could be private equity. It could be challenge funds in each country. And then after linkage and supporting the investment preparedness, we walk the journey with the client to ensure they receive that financing that they require to grow their businesses. And eventually, once the funds are received, we have a post-disbursement support where we work with the client to ensure that the funds actually be able to implement the funding activities. And if there are challenges that the program can solution, we are able to address that with the client. So those are the three main technical expertise areas of the business. And over to you, Songbae.
Thank you, Beatrice. So just a couple things I want to highlight. First, this program is out of our Center for Nutrition, also a DC center in the Bureau for Resilience and Food Security. So it's a nutrition program overall. Second, it works with food processors, as Beatrice mentioned. Third, I think the really interesting aspect is that it has these private sector multinational food companies that have volunteer experts that can work on specific problems that you might have as a food processor in Africa. And then last, I think of that as the main program. And then Beatrice is the access to finance person. So they do have this nice, interesting, combination of the operational technical assistance, and then plus they've added on the access to finance. So I want to pass it on over to Richard now, to ACELI. And if you can explain a little bit more, ACELI is a big program. Explain where technical assistance fits in your role.
Thank you, Songbae. So my name is Richard Midikira, and I'm the Technical Assistance Manager at ACELI Africa, and I'm based in Nairobi. So I'll do a very quick introduction into who we are, what we're doing, and what is involved with respect to our TA program. So ACELI is a market incentive facility with the audacious task of demonstrating how public finance can be used to catalyze increased private capital flows to agri-SMEs. We are working in Kenya, Uganda, Rwanda, and Tanzania. Underlying this is an incentive program for lenders through which we have accredited 26 lenders and unlocked $23 million in capital to agri-SMEs since September of 2020. Our goal is to mobilize over $600 million in capital to agri-SMEs by 2025. So complementary to this is a technical assistance program, which I'm responsible for, and which seeks to generate a pipeline of productive SMEs across the value chain. So it could be in primary production, aggregation, trading, export. We are agnostic to the role that you play in the value chain. And through the TA program, we hope to help these SMEs access capital and deliver socioeconomic and environmental impact. So for both the incentive and TA programs, we target what is typically referred to as the missing middle. And in the context of TA, we work with SMEs with annual revenues of between 50,000 USD and 5 million USD. So we have further segmented the SMEs into 3 tiers and develop programs that are responsive to the needs of that particular segment. So for instance, at the lower tier, and these are SMEs with annual revenues of $50,000 to $250,000 that somebody mentioned earlier, we have a standardized group program delivered over 7 months that is focused on establishing financial and operational structures or practices to help the SMEs thrive. And at the higher end, and this is SMEs with annual revenues of 400,000 to 5 million, the approach is a bit more customized to the needs of the SME and tends to revolve around product or market diversification strategies and capital raising support. So just like to reiterate that we are currently inviting applications from SMEs for both the standardized program and the one-to-one support. Thank you, and over to you, Songbae.
Thank you, Richard. And just reiterates my point. I mean, I'm very familiar with ACELI, but all the information you provided, it's even hard for me to follow because there's just so much to digest. So again, if I had to summarize ACELI, I would say, first of all, I describe it as a market incentive facility that's really trying to encourage more lending to agri-SMEs in Africa. But it works. It doesn't provide the loans themselves. It works with existing lenders. But the second thing is, so that's the supply side. They're trying to increase the demand side. And that's the work that Richard does on the technical assistance side. And the last thing I'll just say is just to highlight his last point. They have an open call right now for applicants to their 2 technical assistance programs. One, the Tier 1 for smaller SMEs, and which is a group virtual program, and Tier 3, which is larger SMEs that have one-on-one technical assistance. The first one is free if you get accepted. The second one, there's a cost share. So with that, let me pass it over to Grace from the Kenya Investment Mechanism. And one thing to think about again is how it's similar or different than ACELI. And not for you to answer, Grace, but for people to listen to when you introduce yourself.
Sure. Good morning and good afternoon, everyone. My name is Grace Mwai. I'm from the Kenya Investment Mechanism. I think I'll pause and try and give as much more information as the team on the call tries to answer the questions Songbae has just suggested. It's easier. So Kenya Investment Mechanism, we call it in short form KIM. I note that we are called Kenya Investment Mechanism, but our geographical scope is actually 6 East African countries plus Ethiopia. So we serve Kenya, Uganda, South Sudan, Burundi, Tanzania, Rwanda, and Ethiopia. So in our focus area and what we exist to do is that we're looking at 2 principal market failures. We see that most investors are discouraged to invest in Kenya and the other East African countries because they have insufficient consulting services that then make the SMEs not be able to access investment because they're not investment ready. So one of our focus area when we look at technical assistance is ensuring that we have quality consulting services being provided to SMEs to be able to access capital, be it debt, equity, or even impact financing. The other bit that we look at is because financial institutions have limited financial products tailored to the underserved regions and underserved sectors, we work with financial institutions to create products that then can be accessible to these SMEs. Some would be focused to sector agnostic areas, others would be focused to particular asks around a particular value chain. So in terms of financial services and financial institutions that we work with, we look at them in terms of capacity building to the financial institutions. But for SMEs, which is the main focus of this session, I'll focus on what we do for SMEs. So with the higher goal of doing capital mobilization at 520 million by August 2023, we are tasked to do a pay-for-results model. So our pay-for-results model focuses on only paying business advisory service providers if they raise capital for the SMEs. The pay-for-results model also works well because then it's very targeted to SMEs and businesses that then are at growth stage or are already at proof of concept. So often we do not work with startups, but there are other people across, and I'm sure Songbae will share this with other USAID projects that are doing capital raises for startups. So our focus mainly is at growth stage. The other thing that we do is focus on credit guarantees utilization. Yes, Songbae, you have this up. What does this mean?
Oh, sorry, that just meant 2 minutes, but you can go ahead and finish. It's just giving you an indication.
Got you. So the other part of the TA that we give is capacity building for both the business advisory service providers and SMEs in pitch coach provision, so they're able to prepare their pitch decks. We also give business modeling services where we work with different business advisory service providers. Currently, we have 35 on the panel to be able to help the SMEs package their needs and also look at post-credit provision. How are they going to scale up their businesses with the different scenarios? We also look at due diligence as part of the services that we provide to SMEs, both from looking at the investors and the landscape in the market, but also looking at market sectors and different information that would be needed by these companies. Why do we do this? I think for us, the focus on what has been key for us is that grants are easily accessible and blended finance is a good mix for what we do, but we only focus mainly on debt and equity capital raises. So we do not give any pay for results incentive for grants. My role as a Deputy Chief of Party, I coordinate the technical team and the technical delivery of the program and the other aspects of the program, because technical assistance is just a small part of the program. It's also raising capital and ensuring business enabling environment. So we work with entities like Capital Markets Authority and Treasury and other offices that then would then be seeking to ensure that capital access is reachable. Thank you.
Thank you, Grace. And I just first want to say that it's great that there seems to be a very vibrant discussion among the participants in the chat. I cannot keep up with it, but I'm glad that folks are connecting there. I just want to say, so the Kenya Investment Mechanism, I think it's very similar in that they work as ACELI, that they provide incentives to existing lenders to increase their lending to agri-SMEs. I think one thing that's very different about the Kenya Investment Mechanism is their work with business advisory service providers, with what they call BASPs, which is very interesting. And I think that's the connection with the agri-SMEs on the call. The second thing about KIM is that they are multi-sector. So ACELI only does ag, but KIM does other sectors as well, including WASH. And lastly, and this again, so you can understand the difference between these programs, ACELI is very targeted as far as its size of SMEs it works with. If you look on the matrix we made, they actually have a limit of how much money, the revenue that the SME makes to be qualified for the technical assistance program. They're the only one that has a limit because they're very targeted for the size that they focus on. Kenya Investment Mechanism is very wide, meaning that it has actually no limit how small the loan size can be or how large the loan size can be that works in their program. So just another thing that helps you understand the differences between the programs. So with that, I'd like to pass it over to Melanie from Casa.
Hi, everyone. Thanks, Songbae. My name is Melanie Machingawuta. I'm a director at TechnoServe, based in Johannesburg. I've been with TechnoServe for about 8 years, overseeing our technical assistance facility in the last few years that we provide alongside impact investors. Currently, the majority of my time is spent as the team lead for the Commercial Agriculture for Smallholders and Agribusiness, Casa, Technical Assistance Facility, which is a 5-year, £8 million initiative funded by UK's Foreign Commonwealth Development Office. And Casa TAF is really part of a broader initiative focused on making the commercial and development case for investing in agribusinesses that source from smallholder farmers. So where Casa TAF specifically comes in is that we provide inclusive technical assistance, which is practically targeted towards strengthening upstream supply chains and also supporting increased commercial viability of businesses that are sourcing from smallholder farmers, and really generating much more meaningful development impact around these businesses. So slightly different, I think, from the rest of the panel in the sense that we're really focused on post-deal technical assistance, which is focused on sort of working with investors, currently 5 active investors, to provide technical assistance to businesses within their portfolios. And you might ask why. So at the moment, agribusiness investments are still a relatively low proportion of total assets under management. And we find that actually investments in smallholder sourcing businesses are a small proportion, or around 30% of agri investments within these portfolios. So there's still a lot more work to really demonstrate that, well, the case for investments in these type of businesses, and that these sourcing businesses are in fact attractive, and that the right type of technical assistance can actually generate returns both for smallholder farmers as well as shareholders. So what type of products, let me focus on the sort of the key types of TA that we offer in 2 overarching categories. One is inclusive business plans. Inclusive business plans are in a nutshell a sort of roadmap for an agribusiness to deepen or broaden its supply chain towards delivering both commercial and social value for smallholders and shareholders. So really mapping out a detailed inclusive business plan and sort of what types of technical assistance are required to help businesses really address fundamental supply chain bottlenecks. Off the back of these inclusive business plans, we offer a range of follow-on technical assistance, which is quite bespoke because it's really based on sort of the key gaps that we've identified within this analysis. So it could be anywhere from supporting a business to set up a viable extension unit in-house, to providing sort of value chain finance and appropriate risk share mechanisms to unlock import and input or small equipment finance for intermediaries along the chain or smallholders themselves. It could be sort of providing support to design an aggregation hub model, for example, to more cost effectively mop up crop from smallholder farmers. So that's just at a very high level, the types of technical assistance we offer, and of course, also focus on cross-cutting issues around how to include women in supply chains more effectively, as well as sort of address climate issues, both at the business and at the smallholder level. And really sort of overall, there's a key learning and influencing agenda from this. So capturing evidence, both commercial impact as well as smallholder level impact, to, as I mentioned earlier, to demonstrate and generate evidence that these models can be set up in a viable way, and to sort of crowd in more investment down the line. So I'll pause there and happy to answer questions as we go.
Thank you, Melanie. So Casa, I think, one interesting thing about Casa, when you think about this technical assistance program, first of all, it came out of something, the Africa Agriculture Fund, AAF Technical Assistance Fund, and that became the Casa Technical Assistance Facility. So I think it's interesting to think where these programs came from. INFP came from another program called SAFE. The Kenya Investment Mechanism, it could be thought of came out of the FinGap program in Ghana. So how these things develop, because I think I want to come back to this point later, is how can they be strengthened? How can they be more effective? And when we start thinking about even the next iteration afterwards, specifically about the Casa TAF, I think that's interesting is it's tied to investors. Whereas, AINFP, their strong relationship, which I think is unique, is with these multinational corporations that provide the expert volunteers. You think about Kim and ACELI, they have the partnerships and relationships with the banks and the funds that provide loans. And Casa has relationships with very large investors like development finance institutions and working with their portfolio. I think so that other point is some of the companies that Casa works with are more in the medium to large size, where you see something like ACELI is going to be working with smaller companies. And finally, this inclusive business plan, I think is a really interesting idea that they try to, make them even, not just investment ready, but make them more inclusive, include more smallholder farmers in their supply chains. And I wonder, if that might be, if they work with large enough companies, that there's even opportunities for smaller agri-SMEs to work with those larger SME companies. And that's similar also to the idea of lead firms in the hope I get it right, the Nigeria activity, that they work with larger companies and use those companies to provide services and capacity building to smaller agri-SMEs. So I had more questions, but I'm going to pause right now because the introduction was great, but took a little longer than I expected. And I really would like to answer some questions from the participants and also have more of a discussion among our panelists. So the first question I want to answer comes from Dorothy, and she says, we attend a lot of webinars, but the results always the same. And I can definitely, relate to that. So, but her follow-on question is, what can we do to make our internal structure stronger so we can access finance? How can small businesses have small packages to boost our growth first, and then when we have grown structurally, go big for finance? So I don't know what she means by small packages, but I wonder if it means small investments. And maybe I'll just rephrase the question and saying, so what's your experience from the SMEs you work with? Would they just prefer that you give them a grant versus technical assistance? What has been, how would you respond, however you interpret her question? Why can't they just get some money from you to strengthen? Do they really need the technical assistance? And I'll open it up to anyone who wants to try answering that.
So Songbae, I can have a go at that, the question. So the experience that we've had with the SMEs that we've worked with so far, particularly at the lower tier, is that a lot of them tend to initially be funded by grants. So typically you'll find that they don't have the kind of traction that would be required to access formal financing. And the cycle is that they will be able to access a grant first in order to be able to sort of have a proof of concept of the business, set up initial structures, and they can evolve eventually to be able to access more larger financing. But I think what is critical around all this is that the TA comes in terms of helping them build their managerial capacity in order to implement the kind of structures that a lender or other type of financer will be looking for. So I think the two go hand in hand in terms of providing those initial small packages to get them off the ground, but also the technical assistance that will help them to be able to evolve and grow and be able to access the larger financing that would take them to the next level.
Thank you, Richard, for trying to take that one. So I'll just ask the question again, because I am really curious. So we provide, for example, a grant to ACELI to provide the technical assistance for free for the smaller SMEs. I'm guessing some SMEs will be like, why don't you just provide us the grant directly so we can use that money to make our businesses stronger? I don't know. Beatrice, would you have a response to that? Do you think that the SMEs that you work with, how do they view the technical assistance that AINFP provides? You know, would they rather just have a grant?
The SMEs we've worked with would rather not just have the financing component on its own. And what we have seen is that the TA, because it is actually speaking to very specific needs that are hindering their growth, they want this as a package. And we had a support element last year where we supported a few clients access some grant funding. And what we saw out of that is that in as much as they received the grant funding, there was much more ask on the TA to support them implement the grant funding activities. So we're seeing these activities going hand in hand, and we're seeing increasingly more demand coming from the financial institutions, even the grant providers, in terms of how can we package our grant together with the TA that you're providing, because it also ensures that there's proper utilization of funding. And we also do the post-disbursement support, where we're also working with the clients to pick out, are there gaps, even after receiving the funding, are there gaps that challenges that you're encountering in implementing these funding activities. So you're seeing demand from both sides, from the clients, they'd rather get that as a package, and even for the capital providers, they'd rather have a TA provider working with them, even as they're providing the funding, be it grant, be it debt.
I think those are some good points, Beatrice. I think, the technical, I'm in the same way. Probably I don't want to do training, but it helps me. And also, I think to your point that investors, when they see that you've done the technical assistance, it gives them more comfort, because they know you're strengthening your business, you're investing in it, and it takes work. But I think that's probably, and people can confirm this, it's the time. It's the time it takes to go through these technical assistance programs. It's a commitment. And we know that these entrepreneurs are busy. I think another point, Beatrice, you raised, and I was at first surprised by, is when I read the report on AINFP about mobilizing finance, it included grants. And I think that's an important part, that if you are a SME working with AINFP, they will help, they can help access equity, debt, or grants. And so they'll be helping access the whole range of capital that's out there that might be appropriate for you. There's two questions I'm going to ask for you, Grace, and I think they're related. The first one is from Hedwig. How can we work together to build a market for business development services, meaning SMEs can access and partially, hopefully, pay for advisors that help them grow their businesses? And second, a question came from John. Can you tell us more about the network of business advisory service providers in Kenya? How many BASPs, how many SMEs do they serve? What are their successes and challenges? And so I think this idea, of these business development services, how is that working? How many do you work with? Are we able to see value? Are the SMEs able to see value enough that they're starting to willing to be able to pay for those services?
Sure. I'll start with Hedwig's question on the market and how we can work together to make sure that the business development service providers are aligned. So currently we have been looking, and actually there's no association in Kenya currently for business development service providers. In our network, we have 40 registered companies that are working with us. And the beauty around it is that we're creating an ecosystem of people who are able to provide business service, advisory service and transaction service providers to financial institutions and anybody else providing equity or debt to the market. So the one thing that we are learning, and this is a good conversation for us even at AGRF and AGRA to seek collaboration, is how to make sure that that network is known by the SMEs, but also by the finance providers. That then they know the companies, they know the set criteria for those companies. So we have particular criteria that we check out before we engage the companies to be able to provide business advisory service providers to our clients, and we can share this and then create an ecosystem together with yourselves to be able to say, this is what you get as a value to get to the network, and this is the criteria that we expect you to meet. So currently we have 40 that are working well, and they are excited, and they're actually very happy with the market. They have had introductions to financial institutions as we work both on the supply and demand side, and they've found that of value because previously some of them have given us feedback that they're not able to get access to commercial banks, for example, but through this program, they've been able to work with banks, and they now understand the commercial bank landscape better. Others also are interested in equity, and they're understanding that better even as they work together. The other aspect that we do with the business advisory service providers is we do peer-to-peer mentoring. So we find the ones that are of a low skill capacity, or the ones based in the regional parts of Kenya, like Northern Kenya, seeking capacity and skill upscaling from the ones based maybe in Nairobi, or those that are already serving in East African market. And we're working together to be able to have them upscale skills of this other. So that also has been a network solution that we've been able to provide as we've worked as King for business advisory service providers to engage and talk together. In terms of the scope and what we've done, so currently we have 40 of them serving, let me say the pipeline. Our pipeline is $1 billion. So from our pipeline of transactions from SMEs, we have $1 billion. So we currently have served 297 SMEs, and they're categorized to micro, small, medium, and large. And this is on the detail of the PDF that was provided. The main sectors that we've served for the detail, for John who had asked for detail, was water and sanitation at 2%. Cross-cutting, where we have fintech, we have people working in solutions that are unique for renewable energy and others that are then combined with agriculture. We have 10%. For livestock, we have 39%. Financial services, providing, those are SMEs in our categories, at 3%, energy at 3%, health at 1%, but culture is the highest at 35%. So because we're sector agnostic and we have many sectors that we work with, different SMEs come to us for different services and different needs. So most of the challenges that the SMEs have been stating as they try to seek capital mobilization is that they find their investment readiness for different funds and different commercial banks is not the same. So the one thing that SMEs are appreciating from us, because we know the landscape and we're able to tell them, if you go to commercial bank, for example, if you go to Equity Bank, this is what you need to prepare. If you go to ABSA Bank, this is what you need to come with. If you go to an equity fund providing energy or capital for climate finance, this is what you need to do. So that ability to be able to quickly guide them from our business advisory service providers and even give them contacts of who they need to reach for technical assistance has been a very welcome to the sector. In terms of the network around East Africa, we're still reaching our reach there. We've only had like 5 SMEs that we've supported in Ethiopia, Rwanda, and Uganda. I think that's it. Oh, Songbae, did I miss out on the data request from John?
Thank you, Grace. I wanted to just ask, take the time to ask the next question to Melanie. So one follow-up question to something I said before, I guess, what is the opportunity when you develop these inclusive business plans? What is the opportunities for those companies, those larger, medium, and larger companies to work with smaller agri-SMEs, or are they really going directly to the smallholder farmer? And I don't know if there's even an example that you can give to kind of explain how these inclusive business plans work.
Sure, thanks, Songbae. This happens quite often, although there are cases where sort of the business, it makes sense or stacks up for the business to invest in an in-house sourcing unit, for example, and take on that role themselves. But where, for example, there may not be the margin potential to invest in services directly that farmers need, or, for example, where there are existing market partners providing critical services like extension, for example, or access to finance, we very often would work through intermediaries in those market systems to provide services. So, for example, aggregators, as I mentioned earlier, the traders that are sort of engaging with multiple smallholder farmers on the ground, mechanization providers, for example, to develop cost-effective models for delivering their product and service to smallholder farmers. This is something that we worked on towards the end of the AAF TAF, for example, as well as sort of intermediaries within those market systems, as I mentioned, that can act as service providers to provide extension, as I mentioned. So one example of kind of what the inclusive business plan practically means in practice is some support that we are providing to a dairy business in Kenya. And they are looking to more directly source milk from smallholder farmers to increase the volumes, reduce costs, and increase quality of milk. And essentially, we supported them to design a sort of a dairy hub model, and are working with them to develop a training program to really focus on sort of key areas to drive farmer yields and quality, and set up a sort of sustainable extension unit in-house, as well as sort of look at options for short-term credit and incentive schemes that are sort of tailored towards different farmer segments to increase small farmer loyalty as well as quality milk, as I mentioned. And in Ghana, we're working with a cocoa business to also more directly source from smallholder farmers, but working and leveraging sort of working both with public extension officers as well as local licensed buying companies on the ground to mop up crops. So really kind of a fundamental part of our work, Songbae, is working through intermediaries that are often micro enterprises as well as smaller traders, for example.
Thank you, Melanie, for explaining that. And so I'm going to ask one more question, and again, open this up to anyone who'd like to take a shot at answering, but I think it's probably a common one. It's from Andy. How will these initiatives help those who want to start but have limited assets? Maybe only having land but no funds to start a processing facility. So I guess another way I might rephrase the question is, if you don't have any assets and we know banks want collateral, will technical assistance, be able to help me eventually really get an investment or a loan?
Let me take that up. So if some of the businesses that we've worked with in the program who are starting up had some of the assets, but not all of it. But how I see how TA can support an enterprise like that has, you have some of the assets. I think there was a mention of land. You begin to purchase equipment. The TA profession can support in identifying the right investors who would be looking for to fund startups, and also support in designing whatever plans that need to be designed to attract capital. So I think it would be more of the TA to support you engage, identify the ideal capital providers who would be working with startups, and also how to engage with them, and sort of have a point of reference. If you get this, if you're working with this financial and you're able to get this financing, then the TA then can come in to actually support you set up the factory. I think I would leave it at that.
Thank you, Beatrice, for taking that one. It's a hard one. Grace, I saw you came off mute. I don't know if you had something you wanted to add.
I wanted to mention that for those that do not have or have a challenge with collateral, we are working with financial institutions as part of the project. on credit guarantee schemes. We are working closely on the Kenya government credit guarantee scheme and also on the development finance corporation scheme. So sometimes we are able to move the financial institution to some extent to consider those transactions because then the risk is reduced. That's what I wanted to say.
Thank you. So I am not going to try to take every last minute, and I know it's the end of the day in Nairobi. It's still morning here in DC where I am, but I do just want to close out by saying, you know, first of all, I think the main thing was starting the conversation, and now you have their information about where to learn more and who to reach out to. For me, that's always been the hardest thing to learn is, well, first, what do they do? What are the criteria? And if it's a fit, you know, how do I apply? So you should have that information now. The second thing is this conversation will continue. Obviously, this is just the pre-event, the rest of the events this whole week. And as we've been saying, and I'll say again, this is a process that will continue after today, after this week. So we do hope, though, you take this week as an opportunity to really reach out and make connections. I think another interesting thing this year is besides the lenders and investors, you do have a lot of business advisory service providers signed up. So reach out to them to see how you might be able to work together. I'm interested in speaking to some myself. And I tried to paste in the chat just this contact information so you have it in an easier form, but not being able to get it to work. So hopefully I think people who needed it asked for it and got it. So the last thing I'll say is, you know, about this point about building and strengthening the ecosystem. So I will just say for myself personally, how I've gotten where I am today is, of course, hard work, definitely luck. And I think most importantly, a very supportive ecosystem. I mean, a system that supported me and helped me succeed. So, you know, we understand how important it is to build that, you know, ecosystem to support agri-SMEs. And we also know that we had a lot to learn and a long way to go. So we really appreciate everyone on this panel that are trying to work with us to solve that problem, and everyone who joined this panel to, you know, contribute to the discussion and join us on this journey. So thanks, everyone, and look forward to staying in touch.
Songbae, maybe before we drop out, I wanted to just remind the SMEs that we have a call for applications. If you're looking for TA support, kindly visit our link. It has been shared by Rose, and do apply to receive support. We also have 2 training sessions open in September and October in Malawi and Tanzania. Please reach out to our teams for that. Thank you.
Thank you, Beatrice. And yes, I should give everyone, Melanie, Richard, Grace, a last word if you'd like.
Yeah, just to say that one of our criteria is that you do need to be in our investor portfolios, but I always welcome any requests that come across my desk. So if you're looking for investments and looking for finance within one of our networks or partners, please do feel free to email. I have responded to one request and shared my email address there, and we can put you in touch with the right TA facilities that are sort of suited to your needs, or investors that really target that ticket size. So please do reach out.
Grace?
Yes, but Kenya investment mechanism is sector agnostic, so we welcome more applications, and we tailor-make the technical assistance to your needs, because then we have the high ticket size items and also as low as $1,000. So we welcome interactions, and we've shared our contact details. Thank you.
And we'll end with you, Richard.
Thank you, Songbae. If you're a business with annual revenues ranging from 50,000 to 250,000 USD, have 2 or more employees, and your immediate strategy is survival or setting up structures for your financial and operational management, please feel free to apply, share a document. And if you're large enterprises with 400,000 to 5 million USD in annual revenue, there is the technical assistance grant, which we're offering for customized TA support. If interested, kindly also send in your application. Thank you.
Thanks, Richard. And I know it wasn't in the run of show, Carol, but since you're off your camera, I will just first say thank you to Laura Peterson, who's on the call, was not a panelist, but really is doing all the background work, and she's also participating in the deal room. And then I will pass it over to Carol to say the final remarks.
Great, thank you so much. This was an incredibly interesting session, and to really understand what these financial institutions, what these facilities can do and what services they can provide is so important for small and medium-sized enterprises. I think for me, the evidence is going to be how many people are going to subscribe, how many people are going to apply, how many people are actually going to be able to grow their business as a result of these incredible efforts in this session. So thank you all to the panelists. Thank you to Songbae for chairing. This was a really excellent session. So thank you all.
Thank you for joining. Bye, everyone.
Bye, everyone.